Hello and welcome to Business Standard. Here's a glimpse of the views expressed on the web pages of Business Standard this week. Three important things are missing in the BJP's messaging for the upcoming assembly elections, and that is uncharacteristic of the party, writes Shekhar Gupta in his weekly column National Interest. The three missing pitches in the Modi-Shah campaign are Pakistan, Bangladeshis and terrorism. This is also a campaign for key states that doesn't feature a foreign factor or national security. There could be three key reasons. First, when the relationships with Nepal and Sri Lanka were already under stress, the last thing India needed was a Bengali-speaking Pakistan in the east. Second, the threat of war in eastern Ladakh reduced. And third, the Chinese underlined harsh reality in Ladakh that unlike with Pakistan, you couldn't be confident of ending a skirmish claiming victory. When you're restoring normalcy at all levels with Pakistan and disengaging with China, there is no insecurity to plug in an election campaign, writes Gupta. In a column for Business Standard, Mahesh Vyas writes that consumer durables companies are heading towards raising prices due to an increase in raw material costs even as the festive season is over and demand for consumer durables has weakened. So companies are testing a hard market as they seek to protect their margins. Margins had soared last year largely because of a fall in commodity prices. In most cases, commodity prices have merely gone back to their year-ago levels, so the worries of these companies are not entirely justified. Besides, demand for consumer durables seems to have changed in favor of households with higher incomes, but this market could be thin. It's important that the sentiments of the lower-income households also increase, as the companies are gambling on a smaller group of people with deeper pockets, Vyas writes. In his weekly column for the Business Standard, T.N. Nainan writes that Dhaka's justification for breaking away from West Pakistan is now self-evident, with the country doing better than New Delhi and outpacing Pakistan on every metric. Nainan writes that while Bangladesh now has better numbers than India on its fiscal deficit, merchandise trade balance, employment, especially of women, and so on, new challenges now await. Bangladesh risks losing major trade and tariff benefits that it has so far enjoyed because the country moved a couple of years ago to developing country status. Nainan goes on to say that while the performance gap between India and Bangladesh in some cases is quite small, it could move ahead of India on the overall Human Development Index with better equality indicators. In a column for Business Standard, A.K. Bhattacharya writes, in the last couple of years, the union government's budgets have suffered from at least two basic problems. One, the budgets have tried to hide the actual extent of the government's fiscal deficit. Two, they've made unrealistic projections for the government's revenue receipts. The combination of these two problems has undermined the sanctity of the budget numbers and therefore has made a travesty of the principles that should underlie prudent and responsible budgeting. The problems are not of recent origin, but they got worse in fiscal 2019 and fiscal 2020. Take a look at how the budget's fiscal consolidation achievements have been misrepresented in the last few years. The culprit here has been the tendency to seek recourse to off-budget borrowings, which do not get captured in the headline fiscal deficit numbers, Bhattacharya writes. Forget woke campaigns, Indian marketers have a far bigger and serious marketing challenge, writes Shailesh Dhobal in a column Business Standard. The pandemic-led economic shock just shrunk the lucrative middle-class market by 32 million people, according to a report by the Pew Research Center based on the World Bank data. And what's worse, as many as 75 million people were pushed below the poverty line. This change in consumer income pyramid has huge implications for all sorts of marketers, anything from colas to cars. Bottom of the pyramid, a concept of treating dirt poor people as a profitable, addressable market is back in vogue. Already one is witnessing firms making brands available at lower prices and convenient single-serve packs from aerated drinks, biscuits, dairy to soaps and shampoos, Dhobal says. In a column for Business Standard, Vanita Kholi Kandekar writes that the recent OTT guidelines issued by the government are fine, but the problem is the grievance redressal system. It has a heavy regulatory hand, including an interdepartmental committee of the Ministry of Information and Broadcasting. For over a decade, Indian TV has been hampered by regulatory pressures around free pricing. This led to very little experimenting, an overdose of mass, ad-dependent programming and poor monetization. Since streaming video had no such constraints, it offered storytellers creative freedom. That is what got in the viewers, got them to subscribe, and kept them there. If Indian storytellers can't tell their stories, if the industry goes the TV way, then not just a soft power, capital too will flow out to countries where the freedom to tell stories exists. In an editorial, Business Standard says the Supreme Court's refusal to extend the loan moratorium period and a total waiver of interest payments is a big relief for both the banking system and the government. An interest waiver on this scale would have significantly impaired the banking system with wider macroeconomic consequences. The government had earlier submitted before the court that if it were to consider waiving interest on all loans for the 6-month moratorium period announced by the RBI, the amount foregone would have been more than 6 trillion rupees. If banks were to bear this burden, then it would wipe out a substantial part of the net worth, rendering most lenders unviable and raising serious doubts about their survival, the editorial says. Business Standard in an editorial writes that the controversy caused by the resignation of Professors Pratap Bhanu Mehta and Arvind Subramaniam from Ashoka University, a liberal arts institution that aims to promote critical thinking, highlights the shrinking space for freedom of expression in India, even for an establishment that is backed by private capital. Mehta's forthright commentary on government policy had become a cause of acute discomfort for some of the university's founders. Ashoka had acquired a global reputation as one of the last bastions of high-quality liberal arts academics in India. Perhaps this controversy underlines the hard truth that it is unrealistic to expect private capital in India to champion the cause of speaking truth to power, whatever the government of the day, the editorial says. In an editorial, Business Standard writes that the Pakistan Army Chief's call for extending the hand of peace to India needs to be viewed with circumspection. It's clear that Islamabad's moves stem from urgent internal compulsions. For one, its economy had slowed sharply even before the pandemic, and Pakistan is surviving on loans from the IMF and G20 institutions. The flow of all this dollar funding could be in jeopardy if the country is blacklisted by the Financial Action Task Force for several shortcomings, including failing to curb terrorism. This latest olive branch also needs to be seen in the context of deteriorating relations between Pakistan and China. Tensions over the $60 billion China-Pakistan economic corridor have been building since Imran Khan came to power, but certainly the ceasefire offers a much-needed respite for populations along the border, the editorial says. There's a great deal that the government could still do to increase vaccine supply, writes Business Standard in an editorial. First, it must revisit the contracts it has signed with the Serum Institute of India and ensure that it makes enough of a margin on each shot for it to have the incentive to increase production. It should also examine why the Bharat Biotech vaccine is not being produced in enough numbers yet. Finally, those vaccines that have received approvals elsewhere, Pfizer, the Russian Sputnik V, and Johnson & Johnson in particular, must be granted quick clearance. India cannot face a debilitating second wave with its previous rules and timelines for vaccinations, nor can it default on its responsibilities to the rest of the world as a vaccine maker. The only option is to use market signals and subsidies to increase supply, the editorial says. The government has done well not to extend the suspension of the Insolvency and Bankruptcy Code of the IBC, writes Business Standard in an editorial. The need for strengthening the insolvency resolution framework cannot be overemphasized. It's the most potent tool for lenders to enforce credit discipline. It's also critical for the Indian banking system dominated by public sector banks. Bankers in the public sector are usually reluctant to adopt other measures to address bad loans due to the fear of investigating agencies. According to the RBI, gross NPAs in the banking system are expected to rise by 13.5% by September. The IBC process will help the banking system deal with the stress, the editorial says. SEBI's new proposed method of phased increases in the deemed tenures of perpetual bonds will allow funds to gradually write down the net present value or the NPV and will likely cause less turmoil, writes Business Standard in an editorial. But it also makes these instruments less attractive to the potential buyer unless they offer much enhanced rates of return. This in turn means that banks would be less inclined to issue such bonds since they would raise less money and pay higher interest. The public sector banks will have to find other ways to shore up Tier 1 capital if these bonds go out of fashion. The government may need to encourage PSBs or public sector banks to raise capital from the market and start the privatization process, the editorial says.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.